So what is tax? So tax is a compulsory contribution imposed by the government on income, property, goods, and services. So our tax is used to fund government programs and services, just like infrastructure, education, healthcare, and others. So in local taxes, there are three types, namely real property tax, business tax, and professional tax. In real property tax, it is a tax on real estate property like land and building. For business tax, these are tax on business operating within a specific locality like here in Talisayan. While in professional tax, it is a tax on professionals like doctors, lawyers, accountants, and the likes. So in tax basics, there are three subtopics, and these are understanding the tax system, tax deductions and credit, and tax efficient strategies.
Income tax. So income tax is a type of tax that government collect from people who earn money. For example, job, business, and investment and self-employment. So value-added tax is a type of tax that government collect on goods and services sold to consumer. Excise tax is a special tax na dinudugang sa presyo of certain goods or services. Documentary stamp tax is a tax on documents that prove ownership, transfer, or creation of rights. Donor's tax is a tax on gift or donations given to others. For example, cash, property transfer, and stock securities. State tax is a tax on the transfer of property when someone passes away.
Tax deduction. A tax deduction is an expense that you can subtract from your taxable income. This means you'll pay less tax on your earnings. It's like having a discount on your taxes. There are common deductions examples, like charitable contribution, which you donate to qualified charities, can be deducted. Medical expenses, if your medical expenses exceed a certain percentage of your income, you may deduct exist. And mortgage interest. Interest that you paid on your home mortgage is usually deductible. And that's the examples of tax deduction. Next, tax credit. A tax credit is a direct reduction in the amount of taxes you owe. Unlike tax deductions, which reduce your taxable income, tax credits directly lower your tax bill. There are this tax credit category, which is a non-refundable tax credit, refundable tax credit, and partially refundable tax credit. The non-refundable tax credit have child tax credit. This credit can be used to offset your tax liability, but any excess amount cannot be refunded. In refundable tax credit, have earned income tax credit. This credit can reduce your tax liability to zero and result in a refund, even if you don't own any taxes. And in partially refundable tax credit, have American Opportunity tax credit. This credit can be reduce your tax liability and may result in partial refund, but the refund amount is limited.
There are three tax efficient strategies. First is maximize deduction and credit. Keep records of medical expenses. Keep all medical costs like doctor, fees, medicine, and hospital bills as they may qualify for tax deduction. Or document education expenses. Save receipt for tuition fees, books, and other educational related costs to claim education related tax benefits. Or donate to charity contributions. To qualified charities may be tax deductible, so keep donations received for documentation. Second strategies is time your income and expenses. Means pay deductible expenses before year end. Pay deductible bills like property, tax, or business expenses by December 31 to reduce taxable income for the year. And the last one is consult a tax professional. It means expert can help you navigate tax laws, find deductions, and tailor strategies to your financial situations.